All right, we are live. The Prospero.Ai stock market live streams. Hope everybody had a great Labor Day weekend. The calendar has flipped over to September and the market took notice. I wore my red shirt today for good reason. We saw Nvidia down more than 7% already today. The markets are down overall. Looks like we're getting a lot of volatility. And I think, Matt, that's something you want to talk about with George today, but I'll let you talk about some of the things you and him are going to discuss.
Yeah, first of all, it's good to see everybody. I was a little shocked today by the 7% drop by NVIDIA. But I'm sure you guys will get into that. But yeah, we're going to talk about two things. George, when we were talking about the newsletter this week, he talked about, he's like, man, we got to get back to the basics. He said, I feel like we've gotten into too many positions. I feel like we're a little overextended. We're having a hard time doing risk management on so many stocks. We need to streamline things. He goes, man, I'd love for you to talk about that in the newsletter. I was like, great. And so we're going to let him unpack what that actually looks like for us at Prospero. And then the other thing we're going to look at is just the whole concept of volatility. I found a fascinating statistic this week, Stephen, that because it feels so volatile right now, but the VIX is actually pretty low comparatively to what election year VIX is going to do over the next month and a half. And so I've never traded in an election year. I started about 4 years ago after the last election. And so I'm just curious if George has any insights on how to trade the volatility of an election year. So we're going to talk about those two things.
Yeah, that's fascinating. And it seems like there's going to be some interesting times ahead. Today isn't the end of the volatility. We also want to talk about today, welcome George to the stream. Hey, George. We have a couple earnings to go over in the next week. Obviously, we had NVIDIA's last week, and we see the stock action since then, so we'll discuss them. But then we have another semiconductor favorite of Prospero's, Broadcom, reporting this Thursday. So we'll highlight those earnings, talk about if they are worth paying attention to, even though we're seeing some changing trends in the market. And we have an old friend, GameStop. They were actually one of the best performing stocks Friday, and they're even green in today's market. So maybe there's a bit of meme stock brewing under the surface. They have earnings a week from today on the 10th. So we'll cover GameStop. Then we have a few other things to highlight in today's stream. I see we have some people rolling in here, so feel free to like it up. It's good for the YouTube and Twitter algorithms, and we love seeing you guys in the stream. So do that real quickly. And we have restaurants. 10 restaurant chains have filed for bankruptcy so far this year, 3 in August alone. So we're going to discuss what that means for the economy and if you should be staying away from public restaurant chains. If you're a longtime viewer, you know Wendy's is one that we've disliked for a while, at least our signals have. Then we have a few more stories. Matt kind of covered the volatility that we are going to see build up probably over the next several months. I think after they discussed about that in the beginning of the stream, we'll highlight maybe beyond the next couple of months and have a longer term look at if you should be buying dips in this volatility and how you can build a portfolio over a more long time frame. And then last but not least, before we turn it over to the model portfolio at the end, we are going to discuss a possible black swan for the market, but you're going to have to stick around till then to know what it is. So without further ado, I'll let Matt and George start with our first section of the stream.
Hey, it's good to see everybody. And first and foremost, we need to say happy birthday to our CEO, George Callas. George, happy birthday, man. What'd you do for your birthday?
I did not think I was going to be asked a question so quickly. I hung out with my family. My sister and her kids were in from Milwaukee, and my first cousin and my aunt, and yeah, we had a grand old family time. We went to Tanglewood in the Berkshires and saw a lot of very old people sing. You know, it was Rufus Wainwright and the Indigo Girls and Judy Collins. So it was fun. My mom really liked it. And it was a great birthday. I love spending time with all little kids.
Yeah. So when for those of y'all that are listening, George and I usually talk on Saturday morning. Sometimes when I called on Saturday morning, George was in a pillow fight with his nieces and nephews. And so getting a little the human side of the man behind Prospero. George, so the newsletter, the idea of the newsletter, we were talking about how we at Prospero want to get back to the basics. You mentioned to me, got a little overextended in some areas, had a few more positions than we were able to really keep our minds around and effectively manage risk. And so, man, it's volatile right now, election year right now. Talk about how at Prospero you've kind of streamlined the portfolio, going back to the basics, if you will.
Yeah, we're always correcting and recorrecting, and that's what you do as a good investor or trader. And the big thing was, obviously we had a great run for 3 weeks or 4, and we were just nailing everything. And so, you get to be sometimes you get to be a little looser then. And we've got some great new tech. Our momentum score is out. That was very helpful. But, essentially sometimes, you realize limitations of the cool new stuff that you created. And while that momentum score was great, we don't yet have exit triggers set up on the momentum score. And there was a few that, especially the smaller cap ones, that there was some nuance because, yeah, sure, you could say if it falls below this score. But the problem is that, especially COM, which I wish we had a terrible day on Friday, wish we had exited a little earlier. It wasn't necessarily moving that much in its score. It was kind of starting on lower net option sentiment. It went down to 65 net option sentiment when I first saw it. It was, in the low 70s. So there was a little nuance to it. We would have liked to de-risk, especially because downside was higher than upside on that stock. But it shows the nuances of, investing in small caps. And that's one of the things we've discussed in the past, setting our signals up to be relative. But as in for a small cap stock, it would have a higher net option sentiment score if it was just higher than a typical small cap stock, or a higher upside, lower downside relative to itself. But every time we talk about that, we kind of say, no, we think it's important because it's kind of how the market works, right? You go into a small cap stock, they're riskier. So the metrics were really set up to be that way. And then in terms of why we changed our approach, I think it was just that, sometimes even if you're smart and you've been in the market for a very long time, you're just trying to put too many things in your head. And it actually became very clear to me on Friday, on a typical day, I was actually putting a lot of time into monitoring that very large portfolio. But it wasn't until I was kind of trying to, hang out with my family a little bit, work a little less that day, that I realized how untenable it probably was for, some of our users, some of our followers, to say hey, I can't, I barely have time to follow this, and I really know what I'm doing. I imagine other people that have jobs that are trying to follow this large portfolio are probably even having a tougher time. So, sometimes we go back and forth, right? A little story for those that might be newer to, Prospero and what we do. We actually changed this year. We changed a lot to be able to update more midweek. We used to say, hey, we really want to hold these stocks for a week. But there were frequent times where I was saying I probably should, but we're trying to hold it for a week. And that wasn't great. We were leaving money on the table for our users, and especially our paid users that pay for the more frequent updates. So ultimately we said, we can update more. We should make all the best moves that we see. But then, I think it got a little too big. All of the best moves, I think, turned into, probably our filter not being as strong as we wanted for an investing letter. So we want to take a step back. We wanted to go higher conviction again. I think we did some midweek updates, but, I think I want to get, sticking to the basics is just about no, we want to do a smaller portfolio of just our high conviction picks. And I actually, when I first looked at it, I really wanted to do 7 longs and 7 shorts instead of 5 and 5. And I kind of turned to my girlfriend and I said that to her. And it wasn't, it's kind of funny. Sometimes I'm some people think honest to a fault sometimes, but how I let in with talking to her, I was yeah, I'm probably keeping too many, but I really I want all of these. And she kind of turned to me and was like, oh, well, why would you keep too many? Like if you said you were going to, like, if the whole point of the letter is that you're going to cut down. So yeah, I think sometimes that's why it's always good to talk to, no matter how smart you are, it's always good to bounce your ideas off other people, because if in my case, I pretty much said that I knew that I was wrong. And yeah, we always want to make it, the investing letter is supposed to be as easy to consume as possible. Sometimes to manage risk, you have to do that. But, in my case, if I'm being really honest with myself, it's that I didn't want to give up my large cap stocks that I loved, that were very high in the signals, especially because they were higher in the signals than, the small cap stocks that I wanted to keep. And that didn't make sense. But, ultimately, like where I landed was I'm actually avoiding small cap stocks largely for now. I think there was one that I kept some smaller cap. I kept Slab, which is small cap that's getting killed, but I also kept VSH, which is right around the same market cap, to manage that risk. And that's what I kind of decided. I was like, well, I think it's too hard to put my finger on these small cap stocks for now. So I'm not going to short any, and I'm not really going to go long any either, unless something seems like a great opportunity. And maybe I should have just avoided it entirely, because Slab, that smaller cap stock that I kept, is the only stock that's really doing poorly today in our long portfolio.
So let's talk about volatility for a second. It's a word that I bet I've typed in the newsletter 200 times over the last 2 months. We saw an interesting statistic, kind of a chart that we put in the newsletter this last week. I found a graph, some research that a guy had done, where he took the last 8 election years and he mapped, and brought them together and mapped out the VIX, the volatility index, and basically showed where we're at the beginning of September. And it feels so volatile right now, because I remember at the end of the week on Friday, QQQ net option sentiment was at 56, I think, at the end of the week. Last time I looked before we got on the call, I think it was like 13 or something. That's volatile, man. That's, some of our historic highs to historic lows. And so the point of the graph was that over the next month and a half, we're actually going to see a pretty sharp increase in volatility. You've been around a while. What advice would you give us about how to trade in a volatile market?
Yeah, I think it's pretty funny, because my statement was a little prophetic in the letter where I was talking about the portfolio management, and I said, you might be wondering why at 56 net option sentiment I'm equal long short, and I just said volatility, and that's the thing. It wasn't necessarily that volatile that week, but we started to see more volatility, and that's what made me nervous. We had seen kind of a stable, higher QQQ net option sentiment when it recovered a bit, and then we started to see more volatility, and that made me nervous enough. But generally, I'm going pretty even long short, just because I've been expecting volatility. And, for people, a simple explanation of volatility is it's just movement, right? And it's not necessarily movement one way or the other. It just means it has moved, it's expected to move, and especially the VIX is expectations. That's what people use to hedge against volatility. Basically, they're saying, I expect the market to move a lot. And you could see the VIX actually, I think it was up. That was one thing. I think all the markets were down last night pre-market. I looked before I went to bed, except the VIX was up close to 1%. And that just says that people are expecting, movement. But just to give people an idea of how you might hedge, right? Let's say you have like a big portfolio of stocks that you like, and you don't necessarily know what you want to sell or how you want to do it. Like the VIX is a great way to just control against any movement one way or the other. Just get your, buy yourself some insurance, essentially, the volatility index VIX. Now, in terms of volatility, if you're talking about professional investors, you know, the last thing a professional investor, unless they want to embarrass themselves, is going to say is they don't like volatility. Fortunes are made in volatile markets for professional investors. And as a professional investor, you're supposed to say that you love volatility because volatility is movement. And movement, the bigger the move, the more money you can make if you're right. And honestly, the best way to handle volatility is to do what I do, which is to go long short, right? Because that way, like, even if, you know, whether the market's up or down, you are, you know, picking winners on that way. And like, you know, if you pick your, you know, if the market's up and you've picked your longs right, like it doesn't matter that your shorts have also gone up and vice versa. And that's one of the things we do in our portfolio that works really well while we're kind of, you know, in whatever market we can do well. And frequently do, obviously, with like our 60% win rate over the last 2 years now. So yeah, we obviously have that going for us. For people that you know don't feel comfortable shorting, that's where we always recommend either like an SQQQ hedge if you're big tech heavy, and you might be if you're heavy on consumer goods, SCC, that's the inverse consumer goods index, or you know, if you're long short, like we're saying, if you're already exposed to both, maybe you have SQQQ and you're long a lot of tech. You can also buy the VIX. Like that's an extra insurance where you're just like, well, you know, maybe I'm not that sure about direction, but I am sure about volatility. And that's a good way to get paid on that. If you're sure on volatility, just buying the VIX. There's more advanced tactics like, you know, an option straddle, for example. That's a way to buy volatility on the stock level using options. But we don't really teach options here. That's just for people that if you do trade options already and you want to look for a way that you might be able to win with volatility, you can Google that. I'm not really gonna teach that from the ground up. And we always have our options disclaimer. If you don't really trade options, I do not think now is the time to learn. But these are kind of all the strategies. Oh, and then in terms of the election, you know, just to repeat ourselves, like, yeah, we've been calling this for months now. Like, well, ever since we saw the market turn on a day that Trump said something about Taiwan, we've been very, very cautious about this, and you should be. And unlike this, and the graph that Matt shared was great. Unlike this, where after the election, you know, a lot of the times it gets better. I think after the election, there's every reason to believe it could get worse this year because, you know, it might, regardless of the outcome, it might be messy. Or it's likely to be at least a little messy. Yeah. So yeah, buckle up, prepare for volatility, but also like, especially as you get more advanced, like we're saying, that's why I gave like the data point on a profession. Like I'm not nervous about the volatility. As you get into your zone, volatility should be something that you're excited about because there's opportunity, there's big movements. If you can figure everything out right, and figure out like, you know, winners you like, losers you like, the right way to hedge, it can go very well for you. But just so you know, I do not expect this to be a market. I think I expect it to be net bearish heading into the election. So that isn't the best time for a well-hedged long strategy, right? I think unless you're netting out a little bit, you know, basically like you have more upside if the market goes down, you might just want to consider transferring money into cash.
So last question, man, I'll get it out of y'all's hair. So when you're in this situation, it's been volatile, you're hedging, you're long, short. How long does a market have to show you a trend, George, before you feel comfortable being more aggressive?
I mean, it really depends on what's going on. Like for me, Like I obviously that's why we invented SPY and QQQ net option sentiment, because length of time is very difficult. Like if I saw QQQ net option sentiment shoot up to 60, back to 60 today and stay there for a little bit, I would grab more longs in my portfolio again. Like you really have to be sensitive to data, like especially if you're talking about long short. That's, if you're just a buy and hold, you don't have to be that sensitive to data. And if you're not worried about this, and on a longer scale, you generally don't have reason to be worried about buy and hold. But if you're getting into, if you're throwing your hat into the ring of going long short, hedging with SQQQ, which could obviously SQQQ could easily swing 10% in the other way in like a day, 2 days, it could swing more. So, if you're a buy and hold and, then pick your favorites, like go as much to cash as you feel comfortable with in case it goes down. And that's your strategy. If you're anything more active, you have to be very sensitive to the data, as Jerome Powell says.
That's a good word. Hey, thank you so much, George. Hope y'all have an amazing day. Steven, hand it over to you, brother.
Thanks for joining us, Matt. I think that was a great discussion, and I want to pick up right on the note of volatility. NVIDIA earnings last week, we were hyping it up a lot. Everybody was in the stock market world. As we said last week, there was watch parties for it. The dust is now settling, and NVIDIA is dropping. So definitely want to talk about the state of NVIDIA, and then after we get to that, we have Broadcom to talk about. But let's hit NVIDIA first.
Yeah, I mean, it's the kind of thing that if you hear us talk for long enough on something, it ends up a lot of the times it ends up coming to fruition. And what we've talked about on NVIDIA for a long time is like both the fact that their market share, needs to be above 80% or people might panic. And then there's the other thing where it's just like they can't keep up the sales growth that they had. I mean, it's just impossible. That sales growth was incredible. You can't 200% growth on top of a 200% growth. So the market was it was a weird, I would say the weird reaction wasn't necessarily like, yes, they have like, I think it was 120, 130% growth, something like that. I could see them being like, well, it's not 200 and hitting the stock. But I would say the weird part about it was they actually raised guidance for next quarter beyond Wall Street's expectations. That was the weirdest part to me, that they saw that guidance raise. I think what ultimately happened was the market didn't seem to love, and I was, one of the reasons why you watch live, the market seemed to react not well to the way Jensen Huang talked about costs, which like, it doesn't make as much sense to me if revenues, profits are still going to be in the way that people want them to just like zero in on the cost part. And of course, like we talked about, they're all filled up. Their newest chip is like, there's more orders, Blackwell, there's more orders than chips. So I'd say that kind of all adds up to me kind of a little confused about what happened. But I just think the market is looking for I think the market's unsure, and anything that isn't just like over exuberance is you're going to see a poor reaction to that. And NVIDIA is still a great company to own long-term, but it's one of those things that you never, because it's such a great company to own long-term, you never really know the difference between actual disappointment and opportunistic shorting, because people are going to love to be opportunistic shorters around anything that's remotely disappointing, or institutions are going to be opportunistic shorters just to get the stock to a price that they know it's going to go up from. And sometimes you'll see behavior like that. So you never really know with this kind of thing. To transition to Broadcom, I think Broadcom is going to be very interesting because they don't have the same problem as NVIDIA, where they've grown at like such insane amounts that any quarter that isn't like a 230% growth is going to be disappointing for them. I think Broadcom could very easily beat earnings and raise guidance. And I think that could send a lot of chip stocks back in the other direction. So we're going to want to watch closely for that. I don't know if I really want to play it just because of how tight the market is, but I do think that could be a big opportunity. And I do think, as we've talked about, Broadcom is a lot more diversified versus a lot of the other chip makers, which is why we kind of call it the safest pick. We'll watch the signals going into their earnings, but I could easily see them doing a double beat and raising their guidance and then kind of reversing this early week action. And again, like we talked about with NVIDIA, you never know if this could be some opportunistic shorting going into Broadcom's earnings to get, chips at a better price before they run again.
And so Broadcom is a stock that I feel like we've talked about maybe even more highly in favor of than NVIDIA, especially recently. So although we're seeing some volatility and some negative action in the stocks currently, and maybe we will for like the next week or months, I think it might be important to highlight for people, especially if you feel that they're still like, I don't want to like quote unquote slam dunk investments over like a year, 3 years, 5 years, 10 years. Like you still like them a lot long term. It's just the very short term might be a little tricky. Is that correct?
Yeah. I mean, like any of these chip stocks, like there's a big future for. Like there's a question as to value, right? Especially if there's the supply issues that we're talking about, and especially like part of the value is stability. And all of these, well, why we like Broadcom more is it's like diversified a lot more into things like cell phones, cars. Like the thing about NVIDIA right now, it's so based on the cloud providers. Those are their largest customers by far, like in the billions each one, right? And if those businesses basically like, Amazon's probably the easiest, but like the others are, Meta's an ad business. I mean, sorry, Meta's not one of their biggest customers. But Google is what I meant, an ad business. So yeah, if we see people tightening their ad budgets, if we see people, basically spending less, although Amazon is kind of like, people buy so many different things from Amazon. Who knows if it's like if it's a consumer defensive, not a consumer cyclical at the end of the day, because it does sell everything. But, if people cut back on their overall budgets, just like less raw spend, that is something that could affect Amazon. And if those companies are affected, that could very well affect, NVIDIA's orders, especially. But, the other side of that is as we said, they're maxed out on orders, even on their newest chip. So I think it's something that like AI is here to stay. And we talk about like AI is here to stay. The products might not be fully fleshed out yet, but the need for chips is. So I think whatever chips business you're talking about, like there is a bottom. It might not be priced in terms of economic troubles that could be on the way. It might not be priced in that way, where it's a good value right now, but they can only drop so much before it's a good value. And we've kind of seen that like in the last few months, a few times, where these stocks do seem to bottom out a little bit and then have very severe reversals. And it could be Broadcom earnings before we see another severe reversal, especially if today and tomorrow are both tough days.
And so I want to spin to our next stock, which was up on Friday. And then even in today's down market, it is still up 1%. GameStop, it has earnings the 10th of September. Surprising for me to see how it's doing today, especially in such a bad market. I don't know. It seems to be there's some kind of weird correlation where it's like the worse the market is, it's like the bots and the programs just say like, all right, let's look for anything. GameStop is like an anti-market like action. It's weird. But do you think we could see some meme stock mania come back with their earnings next week?
Well, we're going to do a little education on what the meme stalkers think again. And like one of the reasons that those two things are tied together is that one of the things that meme stalkers believe is that, there's a big shorting conspiracy on these stocks, and that, if there's trouble, the market could be blowing up and there's chatter like, oh, here it comes. This is the crash. And it's going to be, margin call, GameStop, whatever keywords you'd like to have. But the thing that always kind of falls short on this, and I just always have to remind people in case you see people online saying this, like margin calls are for overall economic weakness, right? There's just a lot of troubles in the market. A lot of the times, there are margin calls over, basically all of the bad assets in the mortgage industry. Now, the problem with a margin call over like shorters now is like shorters haven't been doing so bad. Like the market's been up, but it's been a little volatile. Like those margin calls on the short side would have to be like a huge sustained bull run, and especially a bull run in those smaller cap stocks. And that's not what we've really seen. We haven't really seen sustained margin pressure. So like, it's a very weird thing. And the other thing, I don't normally give this part, but why not? I'll give it today. The other weird thing about that statement is that like in a situation where there's a margin call, you don't get paid out. What ends up happening is the market gets like, to use the mortgage situation, basically like the assets were seized because there was so much owed that they needed to basically like pay out debtors in an organized fashion, right? If you guys short squeeze and it blows up the whole market, like you don't just get the endless price for it because all of like whatever blowed up and owes the money, like still has to be like the assets have to be, it has to go through a process. So you're not going to get your $1 million a share. Like they're just that not only does that money not exist in the economy, like you don't get paid out full price on assets that blow up an economy. That doesn't happen. So there's a lot of holes in that problem, but I do think that's what happens. Anytime there's trouble in the market, everybody says, oh, this is the crash. Like better buy GameStop. We're going to get paid out. That's not how it would work.
So it sounds like your first instinct would be to short a GameStop pop instead of like buying it and hoping for a pop or whatever, like most meme stock people do. Or is that incorrect and you're just like staying away from it and you don't want to be anywhere near GameStop or any meme stock?
I'd sooner go long than short, just because it's easier to read. I think like the short, you just never know, because for those of the like, sorry to burst another bubble. For those of you that don't know, both AMC and GameStop, for the squeeze, had a lot of institutions juicing it and had a lot of institutions like lending shares and then pulling them, which is what really screws shorters, not a lot of retail investors. It's actually having like debts called on shorts that are out. And when you loan someone a stock to short at any time, you can say, I'm calling it. I'm not loaning it to you anymore. And that's what screws shorters much more than retail investors joining. So that's the thing that I don't know. I wouldn't short a GameStop because I don't know when a bunch of institutions are all of a sudden like, yeah, we don't have much else going on. GameStop's going up. Let's juice this retail trade again. Let's see how many people we can get. So I don't want to be on the other side of that, because the big reason I don't want to be on the other side of that is like, you never know if you're holding and it's about to like go 3x higher, or, it's about to go in the other direction and you feel stupid that you got out. But overall, if you do have the fortitude, those things are going to come down eventually. It's not going to the moon. Like if you're willing to continue to short as something goes up, like you'll probably win in the end. But that's not the trade. That's not the trade for me. It's that's like too stressful. And like there's kind of a concept in poker where you want your money in the pot on your best hand. I'm never going to think GameStop and shorting it or going long. I'm never going to think that's my best hand. So that's not where I want to put my money in the pot.
And so I want to bring up a story now that kind of highlights the state of the economy. So we've had 10 restaurant chains so far this year.
Steven?
Can you hear me? I can hear you and see you.
I've had computer problems in the past, but I think this might be Steven.
Am I gone? Hello.
Yeah, my internet looks good.
I can hear and see you. Can we get a chat? Can the chat hear me?
You now. I couldn't hear you for a second. Yeah.
Okay. I'll start this story over again in case I glitched out for a second. So there's been 10 restaurant chains that have filed for bankruptcy so far this year, and 3 were in August alone. The 3 they mentioned in the story, which I've only heard one of these 3, were Red Lobster, World of Beer, and Sticky's Finger Joint. So chat, if you've heard of all those places, let us know. I can't imagine that, this is a good sign for the economy to see all these restaurants filing for bankruptcy. I know you've disliked Wendy's and our signals have disliked Wendy's for a while. But should investors be cautious about investing in, this side of the market sector of the market, the food industry space, especially chains?
When you first told me this story, I immediately shorted Jack in the Box, and it's going that's going pretty well. Yeah, I mean, I think other than McDonald's that we talked about, that seems to do better in these situations. And I mean, I guess it's like when they're very good at just like lowering their prices. I think everything's in danger, like on the food side, because I think part of what it is like delivery has become so much easier, right? That's like fast, that's easy. Like, especially as these things have gotten more and more expensive, like with inflation, like all of a sudden there's a lot of options that look a lot better that aren't as horrible for you. And I think that's the other thing. I think a lot of consumers are just more aware of how bad this stuff is for them. And unless they can really compete on price, it's hard. Sticky's fingers were good though. I'm surprised they went out. But that's my point. They were like expensive too. They were good, but they were super expensive. And are you just gonna like pay like even like I haven't gotten them in years, but I think even before like all this inflation, they were like $13, $14 for like 3 fingers. So yeah, it becomes tough to like pay a high price to eat something that everybody knows isn't good for them. And yeah, I just think generally, like with consumer spending potentially tightening, and I actually saw, I'm going to share it in the Wednesday letter because I forgot to put it in this letter, like weird recession signs. And apparently, some weird recession signs are lipstick. People buy more lipstick because it's like a luxury good that like they're treating themselves, but is like less expensive. Stripper tips. It was like, that was the headline. They're like, stripper tips apparently are going down. I don't know who and how that's collected. There was a few other ones, but yeah, I mean, whether or not there's like, throw out job loss, which there's starting to be some signs that the job market is weakening, right? Throw that out. Even just looking at consumer debt levels, like you can keep increasing those. Eventually, like that's going to affect your spending. And I think that's, kind of where we're getting to. And yeah, we've done very well. Like last year, consumer cyclical were our best longs. Now this year we've had almost no consumer cyclical longs, and we've shorted it aggressively because of this data. And we've done very well with that.
What's the kind of signal you would look for, I guess, besides the Prospero ones, or maybe it'll only be the Prospero ones, where a consumer cyclical stock or the whole sector would look better in your eyes?
I mean, I think what I look for on consumer cyclical is like primarily like the individual stocks that I look at. I'll like just take a cruise and I'll be like, I looked at, Wendy's and Cracker Barrel and Jack in the Box, some of our favorites. I'll just look overall at the net option sentiment trends there. I think that's helpful. And, if they're all on a downward trend, that is a very important data point to me. But then also like the price action. Consumer cyclical is very much something that can swing, like I think especially in this market, can swing in either direction. Because I think what I've seen, the behavior that I've observed a lot of is we see it swinging like down a lot for good reason, and then sharp corrections when people think they're overvalued or undervalued. And that's tough. And that's why one of the things I look at is price action. Because if I see, even if I'm short stocks and even if the metrics are still looking decent, if I see 1 or 2 days of good price action, I don't want to get caught in an upward trend of consumer cyclical, and I'll just like get out quickly and just like wait for it to look like it's at its top again. And I think you have to use all the tools in the toolkit sometimes. And sometimes just like straight price action is very helpful because you can just move to something that looks to be in a better, sector trend downward, whether it be in net option sentiment, and some of the ones that you're looking at, or just like price.
Here's a bit of a side note from where we were just speaking, but I think, if I'm not mistaken, analyst price targets are a data point that's used in the Prospero signals. But just that data point alone, how much weight do you put on it? I especially noticed it this earnings season for the first time myself, where the stocks would report and then just like a bunch of analyst reports would come out the following days. I never really looked at that before. Are they enough themselves to like have an opinion about a stock, or are they only important when you put them with everything else that are in the signals?
No, they go into upside and downside, and they go into very specific ways. And it's more right now, we're actually changing it up a little bit. We have a smart analyst price target coming out soon. But it's more an aggregate, their means, or like I'd say the difference between the high and low, or difference between the current price and the mean, as well as like the percentage buy, sell, things like that. Like individual analysts, we don't care very much. And like, especially the more deeply covered stocks, like you're not going to have one analyst change things too much.
Okay. Yeah, that was something that just popped into my head. I thought I'd ask it. So you kind of covered this a bit already, but I think I'll circle back to it a bit. You talked about the volatility pre-election, and then you kind of said that after the election, you think there still could remain some volatility. I was going to set this topic up today as maybe it'll end there because there'll be finally certainty one way or the other, and I think from what I know, the market likes certainty, but it doesn't sound like that will be the case, at least you're thinking right now. So let's talk about more after the election. Try to lay out the stock market landscape, early 2025, and I guess the end of this year too.
I mean, will there be certainty? Like, I think even if the votes are counted one way, we have every reason to expect that there might be a dispute. And there's been talks on both ends. There's been Russian interference. There's been personally, I hate what's happened in terms of the actual elections and the votes. And I mean, to me, it's just whatever you think, whether you think that the last election was a sham, although to me, that's very if you think the last election is a sham, I don't even know what the point of any of us voting is anymore. If then your vote really doesn't matter. But what I would say to that is that, I just wish there was some bipartisan effort to build a validation committee or something like that. It's just crazy that we're living in this time where the very essence of our democracy is being questioned. And it was both sides. It was Russian interference. And then it's so I'm not trying to pick sides here, but it just shows that our government is just not very good at doing anything anymore, that they can't just get together and be okay, are there systems that we could agree on where everybody just said the election was good? And to me, the big thing is just the crazy thing to me is all these goddamn ballots, paper ballots. It's so crazy. And I know everybody's gonna be hackers, whatever. But I'm worried about someone burning down a voting center or whatever. And then what do you do? Like a big one or ballots can like all this stuff. Like to me, if people are also worried about like illegals voting, like computers seem like a really good way to like validate citizenship or whatever. Like, and so I don't know why we're not doing that. It just seems absolutely insane. But I do think it's very likely, regardless of what happens, there's going to be some ongoing turmoil.
That doesn't inspire confidence in me. I wasn't even thinking about the like contestant of the election. I was thinking more beyond that.
I think around when someone is actually going to officially take office, I think the market will do well. But until then, I think it's going to be highly volatile, dangerous. And yeah, I mean, I just hope that like some of the other wars don't flare up, you know.
I think
here's add to the chaos.
Here's a good out of the box question that I feel like people probably don't expect to happen. Do you think there's any chance that the overall like SPY QQQ overall indexes could finish this year red for the year?
Definitely.
Okay, that's because I think
there's a chance. Like I wouldn't call it a big chance. Mm-hmm. But yeah, like especially if there's a contested election, I'll like I rarely go too long or too short, but I will be a lot more bear picks than bull heading into the election.
Well, as we're on the topic of bearishness, I think this is one that I wanted to bring up today. So we always cover the Fed and, their path and all that. And, the September rate cut seems certain, but I haven't seen much coverage or much talk about or written about of, their path beyond that. It seems like everybody was so hyper-focused on the first one happening that I'm wondering now if anything is to happen over the coming months where the Fed either can't cut again for like longer than the market's anticipating right now, or anything goes wrong with the path of the Fed beyond this first cut. Could that be a black swan type event? Is the market relying on those cuts to happen, or is it not as important as I'm setting it up right now?
The market is relying on those cuts to happen, and I just think there's little to no chance we don't get a 0.25 cut. We might even get a 0.5 in September. And I think the market spells that out, but we might only get that 0.25, right? They're going to be very sensitive, like to inflation numbers, but I think we're going to get at least. I think with the way the jobs have started to come in, I don't see. And I mean, Powell, who like leaves, he's always like, look at the data. Well, he was pretty much like a cut's coming. So like, if nothing else, like I think you have to take Powell seriously, that his mind is pretty much made up that a cut's coming. And, he's probably getting a lot, like it makes sense. Like, especially with the way the market has started to perform off, what was a very good year. Like, I do think it needs, like, not only do I think it needs the support, and that's not the Fed's job, but it is the Fed's job to monitor the job situation. And facts are facts. Like, companies that have better stock performance are going to be able to afford more money for jobs. They're going to be able to like attract talent for less, because there's an implied value of stock options where, they are not necessarily having to give as much money if you can have a good, stock package, and people are confident in that stock package. So yeah, I think that we're definitely looking at a 0.25, maybe a 0.5 cut. And if we don't get a 0.5, I think we're looking at an almost certain 0.25. But I think we might get that 0.5 because that's the only scheduled meeting before the election. And I think just in an attempt to stabilize as much as possible, we might get that 0.5.
And would that provide a few days reprieve, especially if you expect volatility when that meeting happens? You think there could be like a little mini bull event around that?
Well, I was just checking the probabilities. But yeah, I mean, look, right now we're looking at a 37% chance of that 0.5% cut. Oh, that's interesting. The 2nd of August, it was a 74. Oh no, that might have been pricing in 2 cuts. Yeah, so we're looking at a 37% chance of that. And so, yeah, obviously, if the market thinks it's a 37% chance of something that happens, and it's positive, that's going to send the market, even just like we talk about, even just the models reacting to that is going to create that effect.
So it'd be interesting to watch that number going into the event, because if it stays below 50, but then it actually happens, that would be the sign that the market will react more bullishly. I would think that, if it becomes 100% certainty by that event, then the market will have already priced it in most likely, right?
Yeah,
okay.
Definitely.
And that'll be later this month, so we'll keep our eyes peeled on it. Good thing we just got a question. I was just going to ask for questions because we are approaching our last topic of the day. Now, let's see what this says. Trump has said he's going to abolish the Fed. Do you think the Fed could cut more to add a positive variable for the Dems to win, such as the Fed essentially tries to preserve its existence?
Yeah. I think, we'll see. We'll see if everything that Trump says he's going to get rid of, he actually is going to. But yeah, like we're talking about, I think Trump talks a lot about the stock market. So I think the Fed, maybe to preserve itself, is 0.5 would help the stock market. I think the Dems definitely want the market to perform better. They're gonna encourage it. But I think Powell's not gonna do it just to do it. I think he's gonna do it because I think it's the right thing. But I think it's gonna help the Dems. It's gonna help the Fed. But 37% chance it might not happen. But I do think if it did, that wouldn't be the intention. I don't think Powell really wants to play those kind of games. But anything that helps the market is going to make the Fed look better.
Mm-hmm. And so feel free for our chat right now to comment any more questions. We're about to get into our last topic of the day. It was tough to come up with topics today. I think the world was kind of enjoying its Labor Day weekend and just not creating a lot of news. But this was a funny story that I saw. And it's, it's building off the ongoing thread of, how Prospero has the Eli Lilly. We've talked about these GLP-1 drugs. And the story was talking about how because people who are taking those drugs, their habits are changing. It's killing the wine and spirits industry. I think the sales were down 20% across the board. But I didn't even think of this before, but now connecting back the dots to the restaurant chains, 10 going bankrupt, maybe these GLP-1 drugs are actually causing a lot more shifts than people had anticipated in the food and drink industries.
Yeah, it's kind of funny, right? If you look about and I think you're really only talking about the mental hold that these alcohol companies have on people. I think I heard a stat where I think it's basically addicts, 10% account for a huge, something like that, a huge percentage of these, I think especially the beer brand sales. So yeah, I think people that drink a lot might be the same type of people that have weight issues, and they might really be cutting into that. Yeah, but the thing is, alcohol is not good for you. Especially it's the only thing that really that I've ever put in my body that affects my sleep schedule so profoundly, and you just wake up and you feel like garbage. It's you could stay up all night and feel better than if you've had even 3 or 4 drinks. It's it just is bad for your body. So the only thing that keeps people in that is, I would say, social pressure and just the marketing addiction habit, and obviously those GLPs break the habit. And then I also just think there's other things. There's signaling. I think marijuana being more and more prevalent, that's making people make different choices in terms of if they want to drink. But yeah, I think that we're going to see more of that, and then I just also think like people since the pandemic are socializing less, and I think that's like it touches the restaurants, it touches the alcohol. Like I think a lot of that is like what people do, when they're socializing. So yeah, I think it's a variety of angles, but it's like kind of funny that they just blame the GLP. Like that seems like an easy target when it's like, of course they want to say that because it's something that I couldn't have anticipated or whatever. But I think there's a lot of factors that are, larger macro factors beyond the GLPs that are also problematic for both of those industries.
Hey, I think big food and big pharma are some of the two stronger businesses areas in the USA. So I'd like to see that battle, how it shakes out in the end between the food industry and GLP-1 makers. That would be an interesting dance between the two of them. I see a comment from Chris. Will Trump put more tariffs? He used tariffs in China in the past. That's a good question. Do you think companies like, I don't know, Nike, Starbucks, other one, even Nvidia, companies that have big China exposure, if Trump's elected, could have some risk of tariffs being placed?
Yes. I mean, I think that's definitely, that's definitely so. I mean, I hesitate to predict anything specific with Trump because he's just such a hard person to predict. But I do think, obviously, he's kind of like an isolationist in policy. Like I don't really need to sell that probably to a lot of people. So what isolationists tend to do is they tend to want to, do anything that they can to, reward people inside the country and kind of, I don't want to say punish, but we're just going to go with disreward people outside. Now, like the problem with that when economies are so interconnected is like, yeah, you might end up really hurting a company like Nvidia, like more like something that's like drawing investment into this country. You might end up doing a lot more damage in what you do to Nvidia than you save in, whatever like trinkets we're importing from China. To me, I like as an economist, like I always think of things more along the lines of rewards. I'd rather subsidize and help industries in this country, which is a lot of what China does, by the way. Subsidize and reward businesses in this country as opposed to punishing them outside, like doing things to bring manufacturing back and making like quality products that people want to buy here, as opposed to just like blanket punishing somewhere else. That's just what that's just what I feel, because like I said, I think there could be far more damage to the companies that move this country, like Nvidia, than there's reward to the businesses that because a lot of the times, if we're not buying from China, for example, like we don't have much manufacturing. We're probably just buying like from Mexico or Malaysia or whatever. Like punishing China is punishing Nvidia too, likely, but it's not bringing manufacturing dollars into this country. We're just putting it into other countries. And my strategies, I always like to be direct when I'm talking about economics. I want direct investment. I want direct knowledge that money is going to places that are going to help Americans specifically, not necessarily just hurt China.
So more questions from Rock and Roll. Good to see you in the chat. Haven't seen your name before. Welcome. He's asking about something we've talked about before. Elon going hyper MAGA, supporting Trump. Is that a detriment to Tesla, given a lot of Dem shareholders? And then some other things about the Beijing robot conference.
I think they're a very risky play around the election. I mean, I think if Trump wins, Tesla's going to go gangbusters. Like I've said, I think there's a wink wink deal on full self-driving between Elon and Trump, which is like, I mean, I can't, like, honestly, like some of the stuff, the only thing that really bothers me, there's a few things that bother me in life, but actually this violates a few of them. One, being treated like I'm stupid. And two, hypocrisy, right? And like in the Trump Elon interview, when Elon was talking about like, this is the man that said, we have to go to space because we might be fucked because of global warming. So not only is he doing or climate change, not only is he like pushing electric cars for that purpose, he's also literally saying we got to leave the planet because we might be so screwed. Then him and Trump got together in the little powwow and was like, well, you know, you might have to burn, Elon's like, you might have to burn fossil fuels. You don't want to hurt business too much. It's just like that, the level of hypocrisy. And by the way, treating people like they're stupid. It's just like, okay, we get it. Like, why don't you just say that you're working together and finding middle ground, like, because he's helping you with full self-driving. You don't have to say that, or you could say like, yeah, we might disagree on these things, but we're going to work together to find the best solutions for our country. That's all you need to say. You don't need to betray your principles in front of everyone. It's like, we get it. Like, if we're not, you know, for those of us that aren't stupid. But anyway, yeah, I think like what I've said that's going to be interesting. I mean, I think the Optimus robot is a really interesting product. I think he's already been as hurt by Dem shareholders and customers as he's going to be. I think we're kind of probably getting to the other side of that. What I have said is interesting. Like, he is taking a political side, and such a high profile side taking I've never seen in politics for such a big company. So I am interested to see if the Dems retaliate. But regardless, I think you'll see Tesla go down if the Democrats win, and Tesla go up if Trump wins.
And maybe
for the Democrats, because it's just like, oh, well, you know, whoever they're running, maybe it's going to be someone else by the time the election rolls around. But that was an accident. But I just kind of find that funny. I was like, Trump and the Democrats. Like, that has been the experience that we've had.
Yes, I see one more question maybe we'll get to before we switch over. Chris is just asking, what are some plays if the tariffs are implemented that you would think of? And he asked about Intel.
If the tariffs are implemented, I mean, I'm trying to think if Taiwan Semi might be a good, I don't know if we place the tariffs on Taiwan or just China, but I think Taiwan Semi would probably be a potentially good thing, because I think you might see some things funneling through Taiwan Semi in that case. But I mean, I don't think tariffs are going to be. I don't want to speak out of something I don't know, but I don't think tariffs were. I don't think they were necessarily on chips. I think they were more on like other manufactured goods. But I think you'd have to know what the goods were. And if you want to throw some out, if you're talking about like, I'm not sure if we place tariffs on chips coming out of China, because we have plenty of our own chips. But like I said, I don't know. If you want to be specific about like how I, defensively do that, I'm happy to talk about it. But I'm not sure Intel. I mean, maybe Intel would be a good play just because relatively it could be better than, some of the other ones. But, and like, I don't know how much, say, Intel imports to China themselves, like, or they just buy NVIDIA. But it would have to be something I'd have to know the specifics of the tariffs to speak to.
So maybe we'll do our switch over now, and we'll see if Chris responds back on the other side.
Okay.
All right. So we'll see George in the Prospero.Ai laboratory, and we'll do our model portfolio update for everyone. And we'll see if Chris has a follow-up to the question on tariffs. Let's get a live look at the markets. When we started the stream, they were quite red. Let's see if they are still there. Okay, so the QQQ is down 2.26% right now. SPY down 1.5%. Dow Jones down 1%. And the IWM down 2.5%, leading all of the indexes in the red today, leading in the wrong way. So small caps, which had looked slightly stronger recently, are again, when there's any kind of trouble going on in the markets, it looks like they are going to be the underperforming sector. And time to look at the SPY and the QQQ net option sentiment. Let's look at the QQQ first. Okay, so the QQQ is down to 15. It's been pretty volatile recently, bouncing between, actually, it was in the 40s and 50s up until today. Now is a new low of the trend. And if you look at the time series graph, it's complete downtrending, lower highs, lower lows. So not a great looking trend for the QQQ, which we were highlighting. Hopefully you guys caught during our Monday and Wednesday stream last week. The trend was starting to shift on the net option sentiment. And the SPY is now at 33. So it is over double the QQQ, but still in a lower level than where it's been. The SPY trend is a bit less aggressively downtrending than the QQQ. It's been between low 40s, low 50s recently. So we are at a low, but definitely less of a strong deterioration in the SPY. Maybe we should look at, can we look at the Dow Jones? Let's see if that pops up. Because the Dow, I think, was the only index at all-time highs at the end of last week. Yeah, and the Dow is currently at 58, so maybe it's the strongest of the bunch. And it's actually rising from a level of in the single digits last week, so looking a lot stronger. Maybe that's something to spin George's way when he rejoins the stream. We've had over 1,300 people in here. Thank you all for tuning in so much. I think a lot of the viewership is coming from Twitter or X, so thank you. Share it with your friends. Like the stream on Twitter and YouTube if you like the topics we covered today. George, I just looked at SPY, QQQ, and Dow Jones in net option sentiment in Prospero, and Dow was the strongest, SPY was second, QQQ was the lowest. But it's interesting, the Dow was in single digits last week, and now it's at like 56.
Wow.
So a lot shifting in the overall markets, especially with the net option sentiment is picking up.
Yes, I think I just want to do today. I think I'm just going to do like a hack down.
Strong conviction plays. Keep those ones. Mm-hmm.
Yeah, we just want to. I'm just going to get it set up a little bit.
While we're just setting up here, maybe I'll just add this anecdote. Stock we don't really talk about. Walmart is kind of ripping at all-time highs. I just find it interesting. I don't know what that's signaling for the market, but I think it's the best performing Dow Jones stock this year. It's up like 50%. It's kind of weird to see Walmart move like that.
All right, I'm trying to get certain data. Okay, I'm going to do this first. God, this is it's been a long day for me today. Okay. What am I doing? Starting a letter. The first day of the week is just always the craziest by far. Oh, I'm not sharing my screen yet. All right, do you see this?
Yep.
Okay. We want this. All right. God, tech. Hammered. I am proud of myself. Other than one small cap tech stock, I had no. I did see this coming a little bit. Normally, I'm all loaded up on tech.
Yeah, for our viewers, I like kind of summarize and make a Twitter thread on usually Mondays, but today was the day, and I was opening up the model portfolio. I was like, "Ooh, what's it going to be today?" And I was like, "Oh, it's not that much different." I was like, "Okay, we're at least doing better than the market."
Yeah, the model portfolio we started to go pretty heavily short. Like I've been pretty even. Like, look, that's a nice streak of wins. But the longs are not gonna look like the opposite. But I should close farmers market. Anyway, we're doing something a little different.
Big thing here is it might be good to look at increasing our small cap exposure again.
All right, what are we doing here? Okay, so we're not going to do this. We're going to do that. We're going to download this.
Do you have a quick opinion about Costco? Feeling either way, or not really right now? We're getting asked in the chat.
Tell me what the signals. Give us a. Why don't you field this one, Steven? See how you can do.
Sure. All right, looking at Costco, it looks pretty good to me with an 83 profitability, 80 upside to 40 downside. Net option sentiment is at 77, which for a stock like Costco, I feel is pretty good, although short pressure is a little bit high at 73. The trend, the time series graph for net option sentiment is uptrending. I think it looks pretty good.
That does sound good. All right, so we're just going to do.
Costco needs to stock split. It's at 884 right now. 10-for-1 stock split, then you can buy it.
All right. I have a new intern helping me with a letter that actually was like looking up market cap in Excel. I wonder if I can just take his code. Yeah, we're going to give it a try. No time to learn today. It's that little house. I'm gonna have to learn that. Learn that another day. All right, I'm taking more time at this than I wanted. Oh my God. 1 second, I'll be right back.
For Chris, I see you looked up on ChatGPT, I guess, where the tariffs were. Mostly steel and aluminum, although certain types of semiconductors, devices, integrated circuits have had tariffs as well.
See, there we go. All right, so we want this to score. And then not what I wanted to do. All right, we are taking a look at we want to do this, and then we want just so we can see the number of positions. Okay, now we want what's your problem? Nothing's going right for me today. What? Oh, I know what's going on here. I was like, why is it not doing it? Very similar. Okay, now I have everything I need. All right. Damn, that's not as many tech stocks as I thought. Okay. Can you tell me about Wix's net option sentiment?
Wix is currently at 75, giving back some. It was in the mid 90s a little while ago. It's kind of a neutral trend.
Okay. Damn. These energy stocks are just getting killed. I'm not getting out of them. Okay, I think I feel good about this cut down. Or whatever, I'm not. That's legible. You just don't have. How many were here? 140. Geez, how many are here? 105. Okay, how many did we just cut? We just cut. Top chain, pretty good. Right, we might not need to be as crazy on the short side because we want that exposure, but make sure we're not. Definitely getting out of that. Is AT&T a win?
ET.
AT&T.
AT. Loading.
All right. Oh.
Loss. It loaded.
And now we want to look for some small caps. Ooh, let's get more of these. Some good consumer defensives. Anything else? What's going on with MS? Hold on 1 second. I'm gonna. Hello?
I just muted George just in case anything happens. So any information is said on the call. He'll be right back. Looks like he just got a call from someone, but we'll finish up with the model portfolio when he comes back. Thank you, D. Curtin, for commenting so much in the chat. It's great to see people finding value in the streams and the newsletters. Awesome to hear and see. You're a loyal viewer, so I love seeing you in here. Let's see if we got any other comments before that while we were doing the stream. Nope, don't think so. Got to Chris's one, so.
All right, we're ending here. Sorry, I got to jump on another call. Thanks, everyone.
All right, we'll be back Thursday for everyone. See you there.